biggest stablecoin cut its commercial paper holdings to zero, replacing them with U.S. Treasury bills instead. In a blog post, Tether said the move is part of the stablecoin issuer's ongoing efforts to increase transparency and back its tokens with the most secure reserves, transparency, and back its token to ensure investor protection. Commercial paper.
Oh man, yeah, I know. You know anything about Tether? It's been really shady, man. All their promises, and we're getting audits and that done on our assets, and all of our coins are backed by cash, man. Oh yeah, no, yeah, we got legit audits, man. Oh yeah, yeah. Wait, do we say audits? We meant attestations, attestations. That's what we got. I don't know, man. I had to wait and see about Tether. I need a real audit done on Tether. Just be honest.
Is a type of short-term unsecured debt issued by companies, and it's considered to be less reliable than Treasury bills. The announcement comes 5 months after the collapse of Terra USD, which cost investors tens of billions of dollars and led to fallout across the crypto.
Oh man, were you guys around for that? Were you in the market during the Terra Luna crash back in May? Oh man, it went from like $120 something down to like fractions of a penny. Oh, that was a nasty collapse, man. And crypto has just been on a downward spiral ever since. I think they went on to explain in this video that they've actually been kind of flat past couple weeks, month or two. Like, Bitcoin has been trading in that 19 to 22,000 range for quite some time now. ETH's been the same. It's been trading in that like 11 to 1,300 range. They kind of bounced off their bottoms, and we hadn't really seen much movement in them since, man. They've kind of just consolidated at that floor. We'll have to see if they go lower in the future.
Crypto ecosystem. It also comes more than a year after Tether had to pay a multi-million-dollar fine following a legal battle with the New York Attorney General's office over concerns tied to the viability of its reserves. Data from CoinMarketCap shows that currently there are about 68.4 billion Tether tokens in circulation, and that's up from 2 billion 3 years ago. Next, crypto trading firm.
Now you have to wonder, is it because the market cap's going up, or are they just printing me more of these coins to cover for the fact that they're not actually backing their assets? Again, Tether is based in China, so we don't really know a whole lot about it. But I don't know, man. Tether's looking real shady these days. I don't know. The thing is, like, it's so big that if it collapsed, it would just bring the entire crypto market with it, y'all. Like, it really would. Oh man, it would bring down Bitcoin, it'd bring down Ethereum, it'd bring down everything, man. You'd see a crypto bear market, maybe a crypto winter like you've never seen before.
Firm NYDIG is laying off about a third of its staff. The Wall Street Journal, citing people familiar with the matter, reported that 110 employees had been cut in an effort to trim expenses and narrow the company's focus to more promising business. The Bitcoin service company announced in December it raised $1 billion in funding to build an institutional-grade Bitcoin platform with the goal of expanding access to retail customers. However, since that fundraising round, the crypto market has plummeted. The reported layoffs are the latest in a slew of crypto job cuts, including at crypto exchange Gemini and Coinbase, as trading volume has dried up amid the so-called crypto winter.
Yeah, again, I'd say we're in a crypto winter because it's just been pretty dead. The sentiment around cryptos, all of them, but you've really seen the liquidity dry up too. The bid-ask spreads are getting kind of crazy. I don't know. Pretty much all coins, except for Cardano right now, because it's got this weird NFT hype building around it. Even though we're in a bear market, all these other coins are dying, but Cardano seems to be building up a little bit of a hype. Let's see if it can keep it up or just Cardano, man.
We reached out to NYDIG, but as of noon Eastern, we have not yet heard back. Last, an alleged crypto hacker has agreed to pay $22 million to his victim in an AT&T SIM swap case. That's according to CoinDesk, which pointed to a court filing in the Southern District of New York. Ellis Pinsky reportedly swindled crypto investor Michael Turpin out of through an intricate SIM swap scheme that targeted AT&T. SIM swapping happened.
Right, just sold that man an NFT with some code in there. He said, nah, man, you got this NFT for you. Yeah, just buy this NFT, bro. It's all good. No, I'm just playing, y'all.
when someone tricks a mobile carrier into transferring a target's phone number from a registered SIM card to one the hacker has. Turpin sued Pinsky 2 years ago, accusing the then 18-year-old of being the ringleader of a cyber crime scheme. He also sued his carrier AT&T Mobility, but CoinDesk reported that a California judge dismissed the punitive damages claim against the company. Now, we reached out to Pinsky's attorney and AT&T, but as of noon Eastern, we have not gotten comments from either. All right, for our main story of the day, we are going back to the markets. Traditional financial markets have been on a wild ride in recent weeks, reacting to every piece of new economic data. Crypto markets, though, not so much. Crypto World's Sanae McKeel spoke to Ben McMillan of IDX Digital Assets to find out why crypto prices have been holding remarkably steady despite the ongoing macro volatility. And
yeah, like the whole stock market has just been free falling, man. Like you can't find a bottom in even the safe stocks right now, like your Cokes and your Walmart and your McDonald's, man. Everything's just falling. The falling knife in stocks right now. Bonds, man. The yield curve just it looks like Tesla right now, just do back and forth. But yeah, like I said, Bitcoin and Ethereum have just been flat, dude. They just ain't moving.
And what this means for investors.
Thanks for joining us, Ben. What do you make of what has it's this week? I want to start out on volatility because while there have been some breaks above 20,000 and below 19,000, Bitcoin has really been just hanging in the $19,000 level for about a month now, at a time when the macro volatility is kind of all over the place. And nevertheless, Bitcoin is still kind of highly correlated to stocks and other, macro-driven risk assets. What do you make of that?
Yeah, I mean, that's kind of been this interesting story all year is, Bitcoin kind of pivoted away from this inflation hedge narrative into one of, trading more like a high multiple tech stock. QQQ is a good proxy. But interestingly, if you look at the last really 3 months, Bitcoin's actually, been relatively quiet, particularly in the last, month. As you said, the trading range has been very tight. I think that's emblematic of just a lot of the leverage being flushed out, a lot of the so-called weak hands.
That's a good point to talk about, y'all. Just in 2021, especially, the market was just over leveraged. You had everybody in the market were just trading Bitcoin like 100 times margin. They would put in 100 times more than they had in their own, portfolio. And if any of you know anything about margin, you know how dangerous that is because you can lose not only your initial investment, but you can go into debt and all kinds of debt, man. Talking hundreds of thousands of dollars if you're not careful. You want my best advice, man? Just don't touch margin. Just don't even try it. I don't care if it's just 10% margin, dude. Just leave it alone. Take your time, man. The market's not meant for you to just try to rush in and make all this money up front, man. Like we had last year. It's unsustainable, and come on, y'all. Don't be stupid. Don't be stupid out here, y'all.
Fleshed out, and a lot of the risk assets have kind of moved out of Bitcoin, and we're left with it, starting to look like it might be forming a bottom here.
We got a couple of key inflation data points this week. That at least the second one was a little bit market moving. What should we make of those catalysts as price drivers, knowing how quiet the volatility has actually kind of been?
Yeah, it's actually been very interesting to see how Bitcoin has responded to these CPI prints.
Yeah, like it really has just been just kind of just it'll bounce a little bit, or it'll bounce or flatten a little bit. It'll come down, just go back to it, and just stay flat. Or if you get some good news, it'll pop up, come back down, stay flat. Like it really does look like Bitcoin might have found its bottom, y'all. It's been in this nice little accumulation phase. I think a lot of smart money is literally looking at crypto and just thinking, yeah, it's just a good time to start buying it, y'all. I've been buying Bitcoin all year. I'll just be honest with you. I think it's going to be well worth what it is 10 years from now, and then plus some more. This is just the whole future of crypto is just way out in front of it, man. We haven't seen any real money made in crypto yet, in my opinion. The real money's coming way down the road when institutions get in, when the regulation hits, when these stable coins start trying to overtake the dollar. and they're just going to be worried about the stable coins, while meanwhile the real cryptos are the ones actually taking market share. Yeah. Again, that's just my opinion, but I'm going to see how it goes.
Again, relative to something like the NASDAQ, I think all risk assets, Bitcoin has been trading like a risk asset all year, and all risk markets are kind of looking for a peak in, the Fed funds rate, a peak in inflation. And obviously that hasn't happened yet. I think what's interesting in particular is kind of the news out of the Bank of England in the last week or so. And, even if you look at Thursday's CPI print, the market rally, which looked like it was on the back of potentially, some language around a pivot in the ECB, that just...
Yeah, everybody's already running out with the pitchforks about the pivot now, man. Everybody's like, oh, Powell's going to pivot. We had Fed Daily saying we're going to pivot. And these interest rates, they're weakening the economy too much. And they're on the brink of a global collapse. And I haven't heard anything from Powell directly, man. That's the only thing that's got me worried. I have not heard anything from Jerome Powell. Jerome Powell has not said anything about lowering interest rates. He's always consistently said we're going to get inflation back at 2% before we even thinking about cutting. And the same way they bungled the whole inflation situation, and then they're going to bungle this recession situation too. They're going to raise the interest rates more and more and more. They're going to keep staying aggressive because every time, this has been happening almost all year now. Jerome Powell and them doing a really aggressive rate hike. The market's going, okay, they're getting a little too aggressive. Yeah, they got to pull back now. They got to see how bad things are. This is for sure, guys. They got to pull back. Let's go ahead and rally the market. We rally the market. And then the Fed comes back and, we got more room to be aggressive. So they come back even more aggressive. And the cycle repeats over and over and over again. And it's just been a cycle I've been seeing all year. And y'all are just dragging this out, man. Just stop trying to predict what he's going to do. They don't even know what they're going to do. They're going off data from months ago, lagging indicators. They're just going off the seat of their pants, man. They don't know what they're doing tomorrow. They don't know what they're doing today. They don't even know what they were going to do 5 minutes ago. It's just a Fed for you.
It just goes to show you how much the market in general is kind of really looking for that turning point and potential, Fed pivot down the road.
Yes, they are.
And I think Bitcoin in particular, as I mentioned, we've seen a lot of capitulation already happen. This has been a year in which Bitcoin has had its so-called Lehman moments with all these big blowups, which again has kind of flushed leverage out of the system. In the same way that ultimately, Bear and Lehman blowing up in 2008 was good for flushing excess leverage out of the system. Bitcoin,
right. Yep. So getting all the leverage out of the system. That's exactly what Powell was trying to do. That's the only way you lower inflation is to get all the speculation, the leverage, the margin trading. All that has to go. That's the only way you got to lower spending. If people have so much money, they're comfortable to spend money in the market. They're willing to speculate on this, that, and the other thing. We're never going to see inflation come down, guys. It's just that simple. We got to see all this pain. There's going to have to be pain in the market. It is what it is, man. I hate it for us, but it's just they're going to have to keep raising the interest rates. They're going to keep raising the interest rates. The day we see a pivot, this day the market's going to rally. And it will come. I ain't going to say it won't come, but just saying be patient. You got to wait for it. Be patient. That's what the market's all about, right? You got to be patient. Can you wait? Can you wait a second? Okay.
Something similar. So now the question is, when does the risk bid come back into the markets? And that's where all eyes are kind of, again, really looking at the Fed and a peak in CPI and a peak in the Fed funds rate.
I don't want to oversimplify it, but is that kind of it? I mean, even if we get like another catalyst or, we find some new use case, even with all of that, and looking at the headlines this week, BNY Mellon during the custody crypto for their institutional clients. I feel like in another year that would have been big market moving news, and you would have started to see, kind of an opening of the floodgates.
Moved a lot.
It's not a good market for that though. So, are we, despite everything else, despite the fact that kind of the drumbeat for institutional adoption of crypto does continue to get louder, it seems like, still just waiting.
No, I think that's exactly it. I mean, I think you hit the nail on the head. Is if you kind of, peel back the cover on all the macro news, which has been dominating the landscape, the outlook for crypto assets is actually really good. I mean, you've kind of slowly seen, like you said, kind of increasing institutional adoption. Coinbase signing a deal with BlackRock. Even the institutional investors that we talk to are starting to appreciate that this is much more.
Coinbase signed a deal with BlackRock to bring money to institutional investors, and you got Google just made a deal with them to try to make crypto available on Google Pay. So they're even trying to bring it to more retail people. Like I'm telling you guys, the future of crypto is far out, way out ahead of all this market volatility, y'all. You got to zoom your picture out, man. You got to think of where all this stuff's going to be 10 years from now. When I start to turn a little gray, when I come back to y'all and y'all see me being a little gray, yeah, you're actually going to see me be a little orange, man, because I'm going to have a lot of Bitcoin. I'm going to have a lot of money in Bitcoin. I'm not going to be gray. I'm going to be orange, if you get what I'm saying.
More like a potential internet play vis-a-vis, early 2000s, as opposed to, just a digital version of gold, for example. You're starting to see more people talk about, Web3. McKinsey came out with an article talking about, kind of the disruptive potential for Web3 going forward. So all of this is very good for digital assets. But as you rightly pointed out,
I can make a whole video just on the whole Web3 thing. And, Meta, Zuckerberg is all big on the metaverse and all these other companies. It was a big hype cycle in late last year. I remember it was like October, November when they finally changed their name to Meta. They want to be a big player in the metaverse, man. I think they're going to pull it off, but crypto is going to be where the real metaverse is, if we're being honest. I'm sure whatever Zuckerberg comes up with is going to be fantastic and make you a ton of money. But the real space for the metaverse, for true like decentralized ownership of your assets and really being a creative influence and owning your property and owning your artistic visions, crypto is where it's going to be in the NFT market. You're going to be able to own all your assets. That's going to be the future of NFTs, man.
Pointed out, the macro backdrop right now is just weighing on everything. So I do think, we're cautiously optimistic when our models are all in cash currently. So we're not, advocating that anybody necessarily kind of rush in and try and, pick the bottom or buy the dip here. However, that said, when you look at kind of this groundswell of continued positive momentum in use cases, institutional adoption, I do think that when, we get a normalization of markets, a risk appetite starting to come back in, you could see digital assets disproportionately benefit from that as people look forward to the truly.
Couldn't agree more. Yeah, I think the institutional adoption was going to massively speed up this overall adoption, and then you'll see huge swaths of money that have never even had a chance to touch crypto come in. And this is the one thing I need a lot of y'all retail investors to understand, man. With crypto, this is like the first real opportunity that just normal day people like me and you have had the chance to get into projects first. Think about like all the times that venture capital has started up projects, and think about all the time the big institutions that come in to fund these this project or that project or this thing and that thing. This is our thing. This is us, y'all. This is our chance to get in first, and then they have to deal with us. We get to make money off of their money. We're going to take their money, y'all. You get to get in before the big institutions do. This is your chance right here, right now. They're not allowed to yet. They got a few more years before they can get a chance to even get in. And even then, it's going to be slow and drip. Just like this guy's going to put their toes in, and this company's going to put their toes in. This company starts an ETF, and then it's going to be boom. That's just going to blow up. It's going to be in your face. It's going to be in your face. You're going to wish you got something in it, man. Just put something. I don't care if you put like $5 in it, man. Just something. $5, $2. Just every paycheck, man. Do something. You're gonna miss out.
Disruptive plays going forward.
What are some of your clients saying about hacking activity? And I want to point out something from Chainalysis that they had out earlier this week. They said October is now the biggest month in the biggest year ever for hacking activity, with more than half the month still to go. So far this month, $718 million have been stolen from DeFi protocols. How much is that weighing on investors?
It's increasingly so. It's something that
I knew there was a few hack attacks that going around. I didn't know it was like the worst month ever. I had never heard of that. So as far as me as an investor, it's not weighing on me at all. But this is why you invest in good, secure companies, and you try to use secure, reputable exchanges. You try to avoid like the really dingy looking exchanges. Y'all know the ones I'm talking about if you're into crypto. You can usually smell the dingy ones from a mile away. Just stick to your basic ones, man. You ain't got to get fancy out here looking for these high yields on your staking and all this other stuff, man. Just stick to like Coinbase or Binance or KuCoin. I mean, stick to the good ones, man. Most of the time, you'll be able to avoid most hacks. And keep your crypto on a hardware wallet if you can afford one. Maybe one of these hardware wallet companies will come and sponsor one of my videos one day. But keep your money on a hardware wallet, y'all. You make sure you keep one on there, because if the old saying, not your keys, not your crypto. If you don't have your keys to your wallet, then it's not your wallet. Simple as that.
That at the beginning of this year didn't really come up at all. It was much more about just the outright market volatility of digital assets. Now we're starting to get a lot of questions from our institutional clients about, best practices, concerns about hacks, questions about custody. Interestingly, if you go back, 12 months ago, a lot of folks that we spoke to in the institutional space, really wanted to hold, Bitcoin, a so-called spot form. They were worried about the excess roll costs of futures contracts. Now we're seeing a lot more people appreciate the fact that they can get exposure to Bitcoin without having to deal with any, esoteric custody issues. They can have the CME as a trusted counterparty and trade the futures. And that's 100% a function of all these, hacks that have happened in the headlines. So it's definitely something that is weighing on the institutional community as they think about, not necessarily if to participate, but how to participate. Like I said, futures versus spot. And, it's something too that's going to, I think.
Keep in mind, we still don't have a spot ETF of any crypto at all. We don't even have one for Bitcoin. We don't even have one for Ethereum. You can trade Bitcoin and Ethereum futures right now. That's about as far as you can really go. And I think that one day we will see an ETF for both cryptos. I think maybe a decade down the road, you'll see one that's like a big basket of the best cryptos, man. You'll see like a S&P 500 for the top cryptos, or like a Dow Jones for like the top cryptos. You see what I'm saying? Now, these days are coming, y'all. This like you're really getting it on the ground floor. You really are. I need people to understand that.
I think weigh on, kind of true mainstream adoption. People are going to be concerned about, losing money in hacks until, a lot of this gets under control. So that is something the crypto community, really needs to address going forward.
Okay, that's all for Crypto World today, but we are back again on Monday, and we'll see you then.
These projects are always evolving, innovation will always be ready and come to meet these challenges of the hacks and like the shady actors and stuff, man. The technology is there, and most of these coins are actually really secure. It's the same as just investing in stocks, y'all. Make sure you're doing it on good exchanges. Make sure you're buying good stocks. Again, another thing I said in this video is financial advice, y'all. But you just be smart with your money. And make sure you're investing in good coins if you're going to be investing in crypto. And the future is yours, man. The future is yours. We got some breaking news here. Hong Kong stock's down 2%. Bitcoin's still flat though. But that's been it for this video, guys. If you enjoyed the video, please like and subscribe. And I'm looking to come out with more videos. I'm thinking about making a few crypto videos here in the future. I'm getting more of a deep dive into like Bitcoin and Ethereum, and how you can just make a good fortune on crypto, man. How you're going to be a crypto millionaire if you just keep investing and just wait long enough. Give it about 10 years, man. There's going to be a lot more crypto millionaires, crypto billionaires. There'll be crypto billionaires out there. I'm telling you. Just wait. And that's all I got for you in today's video, guys. This has been Tickers and Tokens. Please like and subscribe, and leave a comment down in the video if you got any suggestions for a future video. And I'll talk to you in the next one. Take care.